Hello, folks. Hello, folks. How are you doing? This is the end of the week, the first week uh, of New Year 2024. This is January. This week I have had a very good trade. Like all three categories of analysis were aligned. We can analyze market through price action. We know how the price action is. Fundamental macroeconomic aspects is involved, the issue of the economies. But sometimes we have the case of event-based analysis. So I have had a trade which I posted it 3 times this week, even before when the entry was triggered. It was a US oil pair. This pair was very of the one good trade. I really enjoyed taking this trade this week because of the alignment of all three categories of analysis which I am normally looking at Gatos FX. Like you see here, I say this is one of the trade I took by considering both event-based analysis, fundamental macroeconomic analysis, and price action analysis. When things align in sync, I take such kind of trade with very big confidence while I understand what's happening in the ground. Geopolitical tension have had a great impact with oil prices this week. So I will take you through the analysis through both kinds, through both types of analysis, looking like how do the event, what event actually really caused the tension in the Middle East and block the supply chain of the ships, merchant ships. Also, how do the fundamentals, of course, we have had the first NFP for 2024. How does it also associated with the power of the dollar as well as the technical analysis? Stay tuned. So, starting with a with a event-based analysis, there was a middle. We are in the Middle East tension, especially with Israel-Palestinian war. But the event which has happened this week is associated with the Houthi militant attack for the Meccan ship, whereby the Houthi militants claimed responsibility for an attack on a Meccan ship in the Red Sea. Following the outbreak of 2023 Israel-Hamas war, the Houthi militants began to fire missiles at Israel and attack ships of Yemen's coast in the Red Sea, especially in this week, which they say it's a solidarity with the Palestinian and aiming to facilitate entry of humanitarian aid into Gaza Strip. This has been reported by the CNN, Bloomberg, Al Jazeera, and so many other medias. But by then, how does this attack affect the crude oil price? Like this attack threatened the global supply chain, especially for oil commodity from Middle East, which hiking oil prices and fueling inflation. Like even if we go to the chart, I did this analysis on 4th. It was on 4th January. I was late a little bit. Of course, if I was early looking at this pair, I would have just captured this first entry because technical wise, daily time frame price came to retest at the daily time frame LQE liquidity after having a daily time frame direction change. Right by then. Monday to Tuesday, this is when this is a new year. Monday was a new year, so Monday to Tuesday, this is when the whole militants attacked the Meccan ships in the Middle East Red Sea, and that's what caused the oil price to surge. And of course, we are expecting it to surge up to 73.180. However, I just closed my trade. I just closed my trade early, just based on the structure. I respected this scenario zone found in the daily time frame. But looking at it at the picture of event wise, we could just see that this Middle East crisis and this attack has just blocked the supply chain of the Meccan ships, which contains oily as a commodity, right? Let's hear from the sources.
this does not look as if it is improving by any stretch of the imagination. I mean, things are getting pretty nasty at this point.
And there were huge hopes that Operation Prosperity Guardian, as it's called, which is a multinational security effort led by the US Navy, would do a lot to allay some of the fears. And Maersk was actually one of the shipping companies that decided to continue with this route, having paused it at the end of last year. Now, since Sunday, it's had to issue another 48-hour pause. And that's because, as you said, it came under attack. And it was interesting. There was an aerial attack of some sort with an unknown object. And then 4 Houthi boats actually directly shot at it. 3 of them were then sunk by a US naval helicopter, killing all those on board. So it does feel like another escalation. Remains to be seen at this stage whether Maersk will decide they will redo this transiting route again. So we're waiting for a statement from them.
This is really worrying. I mean, we you know, the Gaza conflict, of course, has been sort of front and center over the last sort of 100 days, and much talk about whether that conflict could slip outside of the region where it is, and this region of the Gulf, one of those, given that the Houthis have got involved here, and clearly this can have an impact on oil prices. We are seeing a spike at present. What can we expect, do you think, at this point?
There are a number of concerns here, for oil particularly. First of all, this is a really important route for oil tankers, of course, and some of them, like BP, are already taking the very long route around. There's also the big risk of escalation at this stage. You've had an Iranian naval warship entering the Red Sea in the last 24 hours. In response, I imagine, to what we are seeing in terms of the multinational effort to try and secure the transit route. So already you're seeing this, and I think the big question going forwards will be whether or not the US and its allies decide to continue to act in self-defense, or whether there'll come a point whether they are willing to attack Houthi positions in Yemen, which would be a significant.
Now, perhaps you could just hear the reporters here have just reported and narrated this how health attack affecting on the supply chain of crude oil. But coming to fundamental wise, we have had NFP news this week. We have had NFP news this week, whereby I think dollar now is going to be powerful in one or another way. Like NFP was positive. We have had 1,073 job lost in the previous month, December. And the expectation of the Fed was that in the consensus new released news, that they forecasted to create 168 new jobs, and eventually the results were positive, with 48,000 more jobs created above the expectation or above the consensus forecast. Like there were new 216,000 jobs created, which is positive for the dollar, which makes dollar strong. Likewise, unemployment rate dropped from the consensus expectation 3.8. It dropped by 0.1 up to 3.7%, which means that now in the US the economy has just prospered in terms of jobs creation. More jobs were created, and in total, unemployment rate has been reduced. So this contributed to the trade like the power of dollar gave strength to US oil to continue to surge over and above. Like you see, we have had a crisis. You have the crisis in the Middle East, and you have prosperity in US. So we expect a dollar to become stronger than the oil itself, and the price to pile up. Like here on my second chart, I narrated it here. This was on Thursday. Once my trade was triggered here, I said one day afterwards, the first Friday of 21st, no doubt, this I posted this chart prior NFP news. I posted this before NFP news, and I said I have no doubt that NFP shall push up this trade into profit target. Why was I anticipating NFP to be positive? This was because of a series of US efforts to rebuild up again the economy, which was falling from the uh, uh, post pandemic corona crisis. We have had a very strong inflation rate, which reached about 70% in a year 2020 up to 6.5. I mean, year 2021, during corona crisis, inflation rate piled up to 7%, dropping to 6.5% in 2022, and 2023 the price closed with 3.1%. And we have had Chairman Powell during his speech on 1st December at Spelman College, Atlanta, Georgia, where he said that the Fed is aiming to lower the inflation rate up to a normal creeping rate, which is nearly 2%. So under this circumstance, we expect that the Fed will have just continued with the hawkish monetary policy by tightening policies, like we have had experienced the increase in interest rate for a course of period of time since 2022, when the Fed initiated the rise up of interest rate in order to cap for this inflation rate. So under this scenario and this circumstance, we have had no doubt to say that okay, I'm expecting that dollar will continue to be stronger under this circumstance. But again, coming to technical wise, like I just have said and mentioned here, in the day time frame, price has changed momentum. Price have had to follow the institutional order flow after we have had at least a 1 hour daily time frame direction change. So let me take you through a little bit hints with a technical analysis. So looking at light sweet crude oil spots, we could see from the monthly time frame that price have had a long-term sales since September last year. This is a weekly time frame whereby price came to test at this monthly SNR zone here down, whereby the candle of December, of course, actually failed to close under or even did not get inside this monthly SNR zone, and leaving the hanging wick above, which indicate that sellers are in control now, and maybe they are trying to make a retracement up to this monthly time frame. So you see liquidity. This is where I am expecting that price will go. But however, likewise, at the weekly time frame, we see we have a moving average here above. Still, the price is trying to go above. We have these hanging wicks, which we are all closing above the monthly support zone. By then, the good store was here at the daily time frame. As soon as the price was failed to maintain this bearish structure, like lower lows and lower highs, lower lows and lower highs, lower lows, lower highs. We have a direction change here. The first touch was on the second, on the January 1st, January 1st, 2024. And this is the day when this hold attached this Red Sea Meccan ships. So this price actually came to the test here at the daily time frame LQ liquidity. By the way, I was not in the market, so I missed this opportunity until I have had this news about the whole attack on Wednesday. That's when I now started to develop interest with this pair and trying to look and compare both event-based analysis, fundamental-wise, because I knew we are going to have an NFP this week, and technical analysis as well. So after missing this first opportunity, and here we were, I just say that the price is expected to surge up to this point, but I missed the first opportunity, so I expected that we could have faced with a retracement, a little bit of retracement up to this hidden daily time frame COC liquidity, and that's where actually the price have came to retest at the daily time frame hidden COC liquidity. The candle closed above and price to push above. Although I'm still expecting that oil price will continue to surge, but however, I just technical wise respected the zone. I respected the zone which I just closed this trade, which is a daily SNR zone. But however, so far I've been able to get about 280 pips, which is good enough. It was just a trade of for me. It took only 3 trades. The first day was the day I analyzed this pair and waiting for Thursday, my entry was triggered, and Friday, boom, boom, boom. During NFP news, price pushed me to the take profit. Like, look here in my Instagram page, I said I am expecting NFP after my trade was being triggered on Thursday, and this was now Friday. I was expecting the positive NSP to push me above to the profit. Hence, here was my main target. But however, so far I have had to respect the nearby daily time frame is in Amazon, and actually it was a Friday. It was a Friday. Business was closing. However, so far, we just look upon next week if we have had an opportunity to close above and then push up the market to continue with the normal trend. So, guys, this is Gatos FX and your mentor, Mr. Gatos, and myself here. I have given you all that's necessary to understand in the market. Both things matters, both fundamental matters, technical wise matters, and even events which shake the global or which affect the global economy also we have to take them into consideration. Thank you for watching and listening. See you next time.